What's up, Facebook? Ty Crandall here with Credit Suite, and today we're going to be diving into 12 different ways that you can actually get money to invest into real estate. So if you're even thinking about investing in real estate, maybe you're already a real estate investor now, today we're going to be diving into decoding a bunch of different ways that you can actually get money to invest in real estate. Look, even if you're not investing in real estate, you can still use these ways to get money for your business. Some of these we'll talk about have interest rates lower than 2%. A lot of these have no consumer credit check. A lot of these have no revenue requirements either. So we're going to talk about options that will work for everybody. Even if you don't have cash flow credit or collateral, we'll talk about options that will work for you. If you do have cash flow credit or collateral, we'll talk about even more options that will be available for you. Rashia, welcome. Thanks for coming in. I appreciate it. So 12 different ways. We're going to be diving in. A lot of stuff we're going to cover today. This is all going to change. This whiteboard that I have behind me, hey, Kiana, welcome. Thanks for coming in. Gets wiped out. This is my last week with this current whiteboard. And then this weekend, we wipe it all out. We start over. And then we have a new special surprise starting next week where we're not going to just be using the whiteboard, but we just got this nice little fancy chalkboard behind me. So we're going to be diving in future streams. We're going to be going through all these whiteboards that we use here to be able to teach. And then we're also introducing a new Blackboard format too. So we'll actually be able to come in and do a chalkboard with really pretty pastel colors and also whiteboards for all different kind of future education. So what's up, Jerome? Thanks for coming in. Derek, thanks for coming in. Everybody, thanks for making it. Ken, welcome. Joel, welcome. Okay, so let's get to the topic at hand. Today we're talking about 12 easy ways to get business credit, loans, and credit lines for real estate investing. I will have a tendency to underpromise and overdeliver, so we've even got some bonuses here that we're going to be talking about as well. Joel, welcome, man. So unsecured credit, one of my favorite funding programs. You've probably heard me talk about this before because it's one of the best funding programs out there, especially for startups. Sean, welcome, man. Thanks for coming in. So with this program, you can get up to $150,000 in credit lines with 0% rates for 6 to 18 months. And you need a 680 FICO score to qualify or a guarantor that has one. You don't need any collateral. You don't need any assets. You don't need any revenue. It's no doc. There's no tax returns. There's no bank statements needed. And a lot of these accounts report to the business credit reporting agencies, and you can get approved even with guarantors. Kayada, welcome. Thanks for coming in. And Ken, welcome. Thanks for coming in. So here's how this works. This is one of the best programs that's out there, and here's why. First of all, you get 0% for 6 to 18 months. That's a big deal. If you're a startup and you're looking for the lowest amount of interest that you could spend, you can't get lower than 0%. So 0% for 6 to 18 months is fantastic. You can get approved for $150,000. I just looked, and our average for the last couple months is $60,000, a little bit higher than that. So you can get a lot of money only based on personal credit quality. So if you have good personal credit now, Precious, welcome. Thanks for coming in. If you have good personal credit now of a 680 score or higher, or a guarantor that has one, maybe you don't, maybe grandpa does, friend, family member, maybe a potential business partner. So for example, maybe somebody approaches you and says, I want to invest in real estate and I want to flip homes, but I don't have time to do it. Well, then in that case, you can have that person use their personal credit to get you the money you need to buy the initial property. You get 0% for 6 to 18 months. These are actual credit lines you can take the physical cash out on, and a lot of them report to the business credit reporting agencies. So it builds your business credit and gets you access to even more capital, as well as getting up to 150 grand. It's no doc, no tax returns, no bank statements, no collateral. So you don't need any assets to qualify. All you need is the 680 or the guarantor that has it. Princess, thanks for coming in. And Jay, thanks for coming in. So again, one of my favorite programs, super easy to get if you have the FICO. You get up to 150 in credit lines and build your business credit. You can't get much better than that. So revenue lending, if you've got a business where you've been in business about a year and over $10,000 a month in revenue, great option. You get funding in about 72 hours with only a 6 months of bank statement review. You can typically get about 10 to 12% of your annual revenue. So if your annual revenue is $500,000, you get about $50,000, $60,000 with this as an example. If your revenue is $200,000, then you get about $20,000 to $25,000 with this type of program. No collaterals needed. Good credit's not needed. A lot of sources won't even pull your personal credit. And you need about 10 monthly deposits, and you just need to have positive ending bank balances in your bank statement at the end of the year. So Hello, Cammie, welcome. Thanks for coming in. Sherry, hello. Thanks for coming in. And Princess says, I've been having a challenge with getting a guarantor. Do you have any programs that provide the guarantor for us? I don't know, because that's a pretty big ask. You're asking somebody to come in and guarantee that if you default, that they're going to take the risk on. I'm not saying that a program like that doesn't exist. It may, but I can just tell you that, not that I know of. And Robert says, how does the 680 score have to be? Well, the 680, what they're looking for is a 680 FICO score, and then they're really looking for established credit. So they're going to want to see you have at least 2 credit cards with limits of $2,000 or higher, or a mortgage or an auto loan. If you have a mortgage or an auto loan, you don't necessarily have to have 2 credit cards with limits of $2,000 or higher, but if you do for that unsecured program, it's definitely what you need. You need some kind of depth to your credit. So now to this revenue lending product. Fast, easy money. A lot of them won't even look at your personal credit. There's no collateral requirements. So all you need is consistent revenue. If you have $10,000 a month in revenue and you have 1 year in business, you can probably get approved. Now, that being said, if you don't have 1 year in business, if you only have 6 months, or you only have $5,000 in revenue, there are some options that can work for you as well that aren't as stringent as the revenue lending. But to have the most amount of options, 1 year in business, $10,000 a month in revenue, fast, easy money. You can literally get funded in about 48 to 72 hours and use the money to invest in real estate. So you find that right deal, you have consistent revenue, you can come in, get approved fairly quickly. What are they looking for approval? Bank account management. They're going to take the money out of your bank account to get paid. They want to make sure the money's there going to be there to take. So if you have a bunch of non-sufficient funds, if you overdraw your bank account, if you have negative ending balances, those type of things will get you denied, because again, they just are looking to make sure you have the money to take when they actually go in to take their payment. So I love these 2 programs. This works great if you have a guarantor or good credit. This one works great if you have revenue and you don't have the guarantor or good credit. So somebody was just asking about the guarantor, and I think that was, and Tanya says Tanya says, is it 680 FICO 8? It's not FICO 8. It's not FICO 9. What they're going to do is they're just going to, it's not even really credit score based. I say a 680 because if you have a 680, you have the kind of credit profile they're looking for. What they're looking for is no derogatory items. They're looking for no bankruptcies, judgments, tax liens on the report. They're looking for probably less than 5 or 6 inquiries in the last 6 months. They're looking for utilization lower than about 40%. If you have those things, you have about a 680 FICO or higher. So if you're pulling a FICO of 680, whether it's FICO 08 or 9, you should probably qualify. Okay, so great 2 options. If you have good credit or a good credit guarantor, if you don't, revenue lending is a great option. Merchant cash advances work similar to revenue lending, but they're only going to be looking at your actual credit card transactions. Now, this works better because you only need to be in business for 6 months or have $5,000 a month, so it's easier to qualify for revenue lending, but you still get the advantage of it being really fast, easy money that's not based on consumer credit. Securities-based credit line is another great way to go. If you have stocks or bonds, or you have a guarantor or a partner that has stocks or bonds, you get rates lower than 5%. You can get a loan or a credit line, and you can basically borrow as much as 90% of the value of the stocks while still earning interest on the stock. Look, here's the deal. A lot of people want to invest in real estate. And what you'll find is that a lot of people have an interest in investing in real estate that will partner with you that don't want to do the physical work, but that have stocks, that have bonds, that have a 401k, that have good credit that they're willing to use to be able to work with you as a partner to be able to actually buy the property. So even if you don't have stocks or bonds, don't forget about this. Because when you're talking to potential investors, they might actually have the stocks or bonds. If they do, wow, it's a great opportunity because they keep their stocks and bonds in place. They still earn the interest. Nothing changes in their world with the stocks and bonds. All that happens is you're using it as collateral. So if you default on the loan, they take the stocks or bonds. It's that simple. And you get interest rates lower than 5% for a working capital credit line, regardless of personal credit quality, regardless of cash flow. So really good way to go. And if you look at these 3, we say, hey, look, great way to go if you have credit. You get up to $150,000. Revenue lending, you get up to $500,000, only based on revenue. We don't care about credit. Don't have good credit, don't have revenue. Well, then look at some of these things like securities-based financing. With this, all you need is the stock or bond as collateral from you or a potential investor or partner. You don't need revenue, you don't need good credit. So there's options no matter what your scenario is if you have good credit or revenue or collateral. Now, another one that's similar is 401k financing. With this one, instead of using stocks or bonds, you're using a 401k as collateral. You can get up to 100% of the value of the 401k with no tax penalties and still get the low interest rates that you're going to see on the securities base, less than 5%. So works very similar to number 4, but a 401k is needed instead of stocks and bonds, and you can borrow as much as 90% of the value of the 401k instead of 90% with a securities-based financing. Now, if you have account receivables, if you work with customers that owe you money, this is a great way to go because you can get 80% of the money that's owed advanced to you in less than 24 hours at a factor rate of only 1.33%. So AR financing is fantastic if people owe you money. Now, most account receivable or AR lenders will only lend if the money that's owed comes from a business or the government, but I'm going to show you a new credit line that just rolled out this year that can work really well, that you don't need to have the receivables come from a business or a government, and I'll show you that. So AR financing doesn't even look at personal credit. They don't care about personal credit quality, and they also don't look at revenue. All they want to see is that you have outstanding account receivables. If you do, you can get approved. Now, the next one I'm going to show you specifically works for house flipping. This program is designed for house flippers. It's an industry-specific program that only works if you're looking to flip homes, and it's called the House Flipper Financing. Now, with this, you can basically get rates of about 8% or up. Use the real estate you're flipping as collateral and get 100% financing to buy and rehab the actual residential property. You get loans up to 65% of the after repair value, and you just need about a mid 600 score to get approved. House reseller program, here's how it works. You can get 100% of the money you need to buy and rehab the property. What they're ultimately looking for is that you can't exceed 65% of the after repair value. What the property is going to be worth after you fix it up. They're looking for 3 things to qualify. Mid 600 score, 650, 660, somewhere in that area. They're looking for experience. They want to see you've done 2 or 3 properties recently, preferably in the last 6 months or to a year. And they're going to have you put money in the escrow account. They're going to want you to have skin in the game to put money into an escrow account. So here's the best way to use this in my professional opinion. Okay? If you don't have experience, use one of these others. Use the unsecured financing to get the credit lines. Use the revenue lending or merchant cash advance and use your revenue to qualify. Use collateral like 401k or stocks. Buy your initial properties, okay, flip them, and then when you flip them and you have 2 or 3 under your belt, then you could just start getting all the financing you need from this one program. With House Flipper Financing, they'll actually let you finance multiple properties. So the problem is you just need to get the first 2 or 3 under your belt to get the experience. And if you don't have the money to do that, then look at one of these other programs we talked about, because we talked about some amazing options where you could get the money to buy your first 1, 2, or 3 properties, whether it's your collateral or somebody else's, whether it's your credit or another guarantor's. Then after you get 2 or 3 under your belt, you switch to house reseller financing and just get the rest of the financing you need from this, or continue to use your loans and credit lines to be able to get you even more properties. A good strategy for real estate investing does not involve one silver bullet, one funding program. A good strategy for real estate investing involves multiple funding programs. When you can involve multiple funding programs, you have more access to loans and credit lines to be able to buy and rehab more properties. So another great way to do it, speaking of tying into the strategy, really comes down to building vendor or business credit. And there's several different ones we talk about here: vendor, store, and fleet. So vendor credit is basically where you're getting credit from trade vendors that report to the business credit reporting agency. So here, let me give you an example. When you're building business credit and you set up the business credibly, you do a quick search to see if you have any business credit reports now at creditsuite.com/reports. The next thing you do is you start establishing credit with places like Uline, Quill, Granger. These guys are invaluable because places like Quill, we have clients that get marketing, that get bandit signs and marketing flyers and everything they need from places like Quill. Well, once you get 5 of these kind of accounts, and again, you can use Uline, you could use Quill, especially if you're flipping property, to buy a lot of the resources you need to do and execute an actual flip. Now, Tricia, I forgot, you'd asked what's the interest rate. I'm not sure which program you asked about. I think it was House for Seller, and the rates are about 8% or up. This is actually considered to be hard money lending, but you're only keeping it for about 6 months, so you're not going to pay a ton in interest. A lot of these other ones have different interest rates, but are pretty low, 0%. These are all based on risk. These are 5% or lower. This is 1.33% or lower. So vendor credit, you get the Uline, you get the Quill, you get some of the stuff you're going to need to do the rehab. Once you have 5 accounts, you move into store credit. Most major retailers offer these, and you can get it without a personal guarantee and without a personal credit check. I'll show you why that matters. Here's real approvals that our clients have received. Now, when you're flipping homes, credit like this, Lowe's 10 grand, Home Depot 2,500, okay? You're coming in here, you're getting stuff like where Sears at. Sears is on here somewhere. Sears for 15 grand. You're getting Visa cards and MasterCards for 11, 10, 7,000 in these type of range. That's a Visa MasterCard right there. That's a Visa. That's a Bank of America. So what happens is now you buy a house. So let's look at a strategy here. You buy a house, your first house, maybe you get approved for unsecured financing using your 680 FICO or a guarantor, you get 50, 60, 100,000. You buy the house, then what you do is you come in and you build your business credit and you get credit at places like Home Depot and Lowe's to rehab the property, okay? And then once you put these into an actual property, then what happens is you're then able to turn around and fix the property up. So you bought the property using that first program, revenue lending, one of these. You use these type of credit here to be able to come in and actually buy the property or to fix up the property. Home Depot, Lowe's, Labor Ready, Sears. This gives you all the materials, all the resources, all the supplies you need to rehab the property. Then you flip the property. Repeat process 2 to 3 times. Then you have some experience that can come in and get house flipper financing. Now Wade says, can you put those into a PDF and upload them in the back office? It'd be nice. We do have this. If this PowerPoint isn't in the back office, email your support team, which you as a partner have that support email. We don't put that out here in public forums, and our support team will get you the PowerPoint if it's not there. But the PowerPoint for this should already be in your back office. If it's not, just notify your support team, Wade, and we'll get it for you. And then if you want to take the PowerPoint, make it into a PDF or whatever else you want to do with it, you can. So you've come in, you've got vendor credit and store credit, Sears, Lowe's, Home Depot, the money you need to rehab the property. So this is a big people make. A lot of people come in and say, look, I need a $100,000 loan or credit line. We say, what do you need it for? Well, I need to buy a property for 60 grand and I need to fix it up, which is another 40. Well, then you don't need a loan for 100. What you need is a loan for 60 to buy the property, and then you need Lowe's, Home Depot, Sears, Labor Ready to get the actual money you need for the tools, for the actual materials to be able to do the rehab. When you split it up this way, it's much easier to get the money you need. It's much easier to get a $50,000 or a $60,000 loan or credit line to buy the property, and when you're using commercial business credit cards to be able to rehab the property. So it's much easier. Like I said, smart investing is coming up and getting multiple funding programs, not just one. So vendor credit, store credit, fleet credit too. This can get you fuel for vehicles and maintenance, repairs, things like that, which can help you along the way. But one thing I don't mention here is cash credit. So you've got the Lowe's, the Home Depot, these type of store business credit cards, but cash credit comes in to get you the Visa, the MasterCard, the Home Depot. So this stuff helps because you can even use these to do cash advances to pay for labor. So you can get the resources you need at Home Depot or Lowe's, and then maybe you come in and use your Visa, your MasterCard, your BJ's card, which is a MasterCard as well, this cash credit to actually even help you pay for the labor. Or you can even use Labor Ready to pay for that labor as well. So this is another one of my favorite programs, which is called AR credit lines. So you can get up to a $100,000 credit line, get the money within 24 hours. And all they're looking at is even revenue of $100,000, or they want to see you have some kind of account receivables. And the rates on this are the lowest you're ever going to find. 0.5% to 7%, or 0.5% to about 0.75% for every week you have the money outstanding. This is my new favorite funding program for 2017. It's amazing. We've had so many clients who couldn't get loans that qualified for this piece of cake, no issues. Here's how it works. They plug into either your accounting software or your bank account. They're looking to make sure you have consistent revenue and responsible bank management or account receivables. If you have one of those two things, you'll be issued a credit line. If you want to supply tax returns, you can get an even higher credit line. So a buddy of mine called me and asked me for a rate merchant advance. I said, no way, man. The rate on that's too high. Let me try you on this first. We got him approved for $6,000 within 24 hours. We got tax returns. We got him approved for $30,000 within 24 hours after that. So within 48 hours, he had access to a $30,000 credit line like that at 0.5% to 0.7% per week outstanding. It takes 12 to 24 weeks to pay the money back. So that means you're paying about $50 in interest for every week the money's actually outstanding on every $1,000 you borrow. Super cheap money, but super easy to get approved. No personal credit check, no business credit check. They don't look at anything other than plugging into either your accounting software like QuickBooks or your bank statements. This is so easy to get approved for this program. It's the easiest credit line I've ever seen to get approved for if you have over $100,000 in revenue now a year, or if you actually have some kind of account receivables. So another option is you can also go crowdfunding. So you could use the power of a crowd, have a good pitch, and come in and go to a Kickstarter, an Indiegogo, and if a crowd likes your idea and you have some supporters, then you could really use crowdfunding to be able to fund your endeavor. Now again, remember, we're talking about a lot of good options here. A good strategy ties them all together. We're talking about a lot of ways to get your initial properties. Once you've done this, go to House Reseller Program, you're solid. Then you can get financing specifically for real estate flipping. But you can't do that without experience. So other programs like crowdfunding help you get that experience. Go to your friends, your families, everybody you know. Have them spread it on social media. Start a project, make it go viral on your own by lining up people that are willing to invest, even if you give them a rate of return. Sometimes with crowdfunding, you can even pay them a little bit for their investment, or don't pay them anything in return. But there's a lot of sites out there that you can use crowdfunding to be able to get your money as well. Some bonuses as well. Don't forget about grants. Loans are great. Grants are better. You don't have to pay them back. So go to portal.hud.gov. There's a lot of good HUD grants that are out there. There's state and local grants. All you're basically doing is creating a grant proposal similar to a business plan. Now with these kind of grants, USDA has them for rural projects. Okay, HUD has them for urban projects. Small Business Innovation Research Program is a program where they're innovating in communities. So remember, state and local grants are available as well. Okay, these are less restrictive than federal grants, and basically you're helping your community. So because you're partnering and you're helping grow your community, then there's a lot of options available. Grants are fantastic for real estate investing because communities don't want there to be rundown properties. So if they find rundown properties in your community, they'll give you grants to go in and buy those properties and rehab them. Think about it. It only helps them. They take a rundown, dilapidated property off the market, and they have somebody come in and fix it and makes it nice. It helps the community. That's why these grants are out there. Federal grants, local grants, state grants, great way to go. There's a lot of money that you can make there. Now, Sherry says, is there a way a new startup company could be able to get approved? Sure. When we look at all these options that we talk about, unsecured financing works great for a startup as long as you have a 680 FICO or a guarantor that does. You need to be in business about 6 months for merchant cash advances to work, and revenue lending a year. Those might not be for you if you're just starting. If you have stocks, bonds, or a 401k or a guarantor that has one, you can use these as a startup. Okay, AR financing you can get as a startup. You can get house flipper financing as a startup as long as you have some flipping experience. If not, I've given you multiple options to get your initial experience to get this done. Vendor credit, store credit, fleet credit, all can be obtained as a startup. A business AR, you need to be in business 1 year for this. Crowdfunding you can get as a startup. All these grants we're talking about you can get as a startup too. So most of the financing is available for a startup. Look, when it comes to getting a loan, let me kind of give you the inside course here. It's really simple. If you want a loan, there's one of three things that you need: cash flow, good credit, or collateral. If you have one of those, or a guarantor, a business partner, somebody that's willing to invest that does, you're solid. Chances are good you're going to be able to get a loan. If you don't have good credit, you don't have cash flow, you don't have collateral, you don't have a guarantor that has any, then build your business credit. You can still get a ton of money building your business credit. You can still get cash credit and store credit at a place like Lowe's, Home Depot, and Sears to buy and rehab properties even with no cash flow credit or collateral. Then in building your business credit, you're building your business credibility, and that helps you get more loans and credit lines as you continue to grow. So a lot of different options there. So again, talked about a lot of options here. In summary, unsecured works amazing if you have a 680 FICO or a guarantor that does. Up to 150 grand in unsecured credit lines at 0%. You can't beat that. You can take the physical cash out. Revenue lending works great if you have consistent revenue. You can get about 10 to 12% of your actual annual revenue lent to you in about 72 hours or less. But they do want you to be in business about 1 year or have 10,000 and have 10,000 a month in revenue. If you don't, well then go with a merchant cash advance. These only look at credit card transactions, not other deposits, but you only need to be in business 6 months and 5,000 in revenue to get approved. Do you have collateral like stocks and bonds? Well, you can borrow as much as 90% of those and get rates of less than 5%. Or if you have a 401k, you can borrow as much as 100% of that and get rates of 5%. Credit lines or loans are available. If you don't have stocks, bonds, securities, if you don't have 401k, then go to a potential investor, a potential partner, a family member, a friend that does. Remember, with things like securities-based lending, you still keep the stocks in place. You still earn interest on them. The only time it comes into play where it's an issue is if you default and that actual guarantor, you, loses that actual collateral that you pledged. AR financing, great if you have outstanding receivables. You can get 80% of those receivables advanced in 24 hours with one of the lowest rates you're going to find. Okay, house flipper works great for flipping homes. It's designed for that, but you've got to have some experience. If you have some experience, it works great. If you don't, consider some of these other options to buy and get experience. Then consider this, because you can get 100% of the money you need to buy and rehab. If you need business credit, or don't forget to use business credit because it can get you a lot of things, you build your initial vendor credit using Quill, Uline, etc. Then you start getting store credit at places like all these different stores, which have a lot of different purposes. But if we're talking about real estate investing, your Home Depot, your Lowe's, your Sears, your Labor Ready, these work great for getting properties repaired. Kevin, thanks for coming in, man. I appreciate it. So you get the store credit. And then again, once you have 5 accounts, you get that store credit. Once you have 10 accounts, then you start to get the Visa cards, the MasterCards, the auto vehicle financing without a personal guarantee. And we see some of these actual approvals. Bank of America for 11, Visa for 11. Okay, we got a BJ's MasterCard for 7. Hello, Nicole. Thanks for coming in. So a lot of different options here. So if you don't have cash flow credit or collateral, you can still build business credit. If you do have one of these other cash flow credit or collateral to get a loan, then you still want to build your business credit because it helps you get access to even more money at better terms. Vendor credit, store credit, fleet credit. We even talked about cash credit. Don't forget about this AR credit line. If you do have $100,000 in revenue or more, or account receivables, and you've been in business 1 year, this is the easiest credit line you're going to get. It doesn't even look at your personal credit. They plug into your accounting software or your bank account. And if you manage your bank account responsibly or have account receivables, you can get approved literally within 24 hours and fund the next day for a real working capital credit line. Crowdfunding works amazing if you have a good network around you. They can contribute money. They can share your post to get it to go viral. So a lot of great options there. Robert, thanks for coming in. Daniel, thanks for coming in. Start over, please, Daniel says. Can't start over, but I am in the middle of a summary, and then this will go live on Facebook. We'll be able to check it out. Okay, and a lot of grants, HUD grants from portal.hud.gov. Okay, state and local grants. With these, you're creating a grant proposal similar to a business plan. Remember, USDA for rural projects, HUD for urban projects, the Small Business Innovation Research Program. Okay, state and local grants are available too. They're easier to qualify because they really think you're helping the community. It's like community outreach. So because you're taking dilapidated properties and fixing them, there's a lot of state and local grants. Now, somebody actually did ask about startups. Well, there's a lot of grants out there for startups as well. First round capital is great. You can get millions in investment there. Beat Spring gets you up to 20 grand. Launch gets you up to $500,000. Jumpstart Foundry for $15,000. Angel Pad if you're a tech entrepreneur. Even Alma Mater. So a lot of grants I just told you about here. These are all for startups. And then the USDA, the HUD, all these work great for getting specific financing for real estate investment. So, a lot of things going on. I know I told you like 12, but I just gave you a lot more. I think we just went over like 10 grants alone that you can get. So remember, the key to getting money for a business, whether you're investing in real estate or anything else, is to have good personal credit or a guarantor that does, have collateral of some kind like 401k or stocks, or have consistent cash flow. You don't need them all, but you need one of them. If you have one of them, you can get some kind of loan, some kind of credit line. If you have none of them, well then build your business credit. By building your business credit, you'll help yourself become more lendable. No, you're probably not going to get loans only based on your business credit, but it definitely helps you to get loans. And you're getting tons of high limit credit you could use to be able to invest in real estate or almost anything else. You're getting 10, 20, 30, 40, even we just had a client on the other day, $75,000 individual limit approvals. You can get Visa cards. You can get MasterCards. You can get credit at Amazon and Walmart and Best Buy and Sunoco and almost every major retailer. Use that to fund your business if you're not lendable, but there's a lot of ways you can get money if you have good credit, cash flow, or collateral. Kevin says, I've established trade lines and good scores. Do I have to PG for a business credit or loan? Well, business credit, no, but it depends on how many trade lines you have. So when it comes to building business credit, you've got to have 5 accounts reported to get to store credit. You have to have 10 accounts reported to get to auto vehicle financing, Visa cards, MasterCards, fleet credit. None of this requires a personal guarantee. When it comes to well, you have to have really well-established business credit and a well-established business to get loans without a PG. They're going to look at your business credit reports that show your employees. They show your revenues. They show your profits. All that stuff is going to have to make sense to get loans without a PG. It takes a lot of trades to get there. So, yes, business credit will help you get loans, help you get more money than you would get it without established business credit and better rates and terms. But business credit alone usually isn't used just to get loans. They're usually going to want to see your revenue, other things. A lot of that stuff's on your credit reports just so you know that it is there. I have 10 on Experian and 22 on D&B. That if you have 32, then you should be able to get most credit that you want without a personal guarantee. I'd say almost all. Loans, it depends on what kind of loan you're applying for. There are some loans that are available without a PG. So for example, there are some equipment financing programs out there that you can get without a PG, and there are others. You're going to have no problem getting business credit. You're probably going to be able to get Visa cards, MasterCard, most credit issuers that issue them with 32 trades. There are even some loans you can look into that might be possible without a PG as well. So a lot of stuff we went over today. I know a lot of you came in late. That's the beautiful thing about Facebook, is that Facebook, the minute this video is over, you can go to facebook.com/credit suite. You can replay it in its entirety, so you got everything we went over. We definitely went through more than 12. We went through at least 10 grants that you can get, let alone all the other different things we talked about. So today we probably talked about nearly 25 different ways you can get money for real estate investing. So keep tuned. Every Thursday at 11 Eastern, I'm here live on Facebook. This week, we wipe out. Saturday, this whole whiteboard goes away. Say goodbye. You'll never see this information again. And we're going to do all new topics for the weeks to come. And we're also going to be making use of this brand new chalkboard that we just got, mixing it up. Why not? Because my whiteboard artist is actually a chalkboard artist. And she said, I'd really like it if you got a chalkboard in there. So I said, no problem. We got a chalkboard. I'm looking forward to see what she comes up with Saturday. So more topics to come in the weeks that follow that will teach you business credit scores, consumer credit scores, bank credit scores, how these things work. We're teaching you all about getting money. We're teaching you all about building business credit. We're going to talk about all kinds of topics that are relative to anybody that owns a business that wants to get money to grow the business. So if that's your interest, I'll be here every Thursday at 11 o'clock. Oh, and don't forget, You also can grab a free guide on building business credit at creditsuite.com/Facebook. creditsuite.com/Facebook. You can get a great guide that maps out in depth these steps to build business credit. Do you have any grants for businesses, for military veterans? There are a lot of them out there, but I don't have them memorized off the top of my head, but it is a good topic that I may go over. If you go to youtube.com/credit suite, then on our YouTube channel, if you type in veteran, you'll find that we've got at least 1 to 3 videos on money that's available for veterans. And those videos do include grants as well, but I don't have them memorized, so I can't tell them to you right now. But if you go to youtube.com/credit suite, you'll get at least 1, maybe 2 or 3 videos that give you all kind of financing options for veterans, including grants. And Kevin, it's okay. Don't be sad. Some of the boards will stay. This board gets rotated out every month. We will miss it, but there will be even cooler stuff on here in the weeks to come. And this chalkboard is going to be awesome once we get this thing fired up, so I'm looking forward to it. So thank you all very much for tuning in. I know how valuable your time is. I try not to waste it. Hopefully you walk out of here with a lot of info you didn't have before you came in. I'll see you next Thursday at 11 o'clock live here on Facebook. New boards, new topics. We're going to dive in and talk to you all about more ways to get money to grow your business. So thanks everybody very much for tuning in. I look forward to seeing you next Thursday at 11 o'clock Eastern. Oh, wait, no, I won't see you next Thursday because next Thursday's Thanksgiving. So I'll be hanging out with my family eating too much food and turkey. I'll see you in 2 weeks live here on Facebook at 11 o'clock because, again, I can't send you, I won't be here Thursday because it's going to be Thanksgiving. We're probably all going to be spending time with our family. So thank you all very much for tuning in. I'll see you in 2 weeks, Thursday, live here on Facebook. If you missed any of this, make sure you check out facebook.com/credit suite and you can get the full replay. Thanks, everybody. Have a great day.